Hey everyone, UC here from iTradePrice. Hope everyone is having a good long holiday weekend. So without further ado, let us go through some of the charts that we follow and trade. So what you're looking at is a QQQ. We just had a monthly bar close, right? Month of August closed. So still from monthly perspective, it says towards the low end of its recent structure, right? So what happened in the month of August was we have a top wick, right? And the stock is sort of trading in the middle of this particular bullish bar, right? So from that perspective, yes, a little pause to the reversal that we thought was underway, or people who were trying to play long, sort of a swing long. So that thing has taken a pause, right, because of this down channel as well. So in the weekly time frame, if we look at it, we've had 3 consecutive weeks with lower lows and lower highs, right over here. And these are all sort of bearish trend bars, right, which means there is very less. The size of the bottom wick is almost, if it's was non-existent in this bar, right? And in this one, we have a very little tail here that shows that there was, not that significant of a buying pressure that we could have seen where we saw a few weeks ago when it traded or bounced from this here area around 293.5. So now, structurally speaking, if it keeps going lower from here, right, even if it breaks 290 here, then 279 definitely is sort of the structure low where we have multiple touch points. We have some history of support zone, so that can definitely be some you can say a target or sort of a magnet for the price to move towards if it breaks down below 290 as well. Okay, for any bounces to occur, structurally speaking, from a daily chart perspective, there's no bullishness right now. The first touch bounce we already saw from 293.5, right? We all played that in the room, or at least I did, right, on this first touch bounce, right? It's always almost given that it at least gives you scalpable trade opportunity from a significant level like that, right? And then what happened on Friday was we opened strong, but it's not up totally bearish engulfing, but still, this is not a bullish looking chart right now, right? So for some reason, people are always obsessed with catching falling knives, or they're just trying to, bottom fish, things like that. It's not a good strategy, right? It's going to be very rare when you end up catching, something at the very bottom. That said, right now, sure, we have, double bounces from here, double bottom from here, this 293.5. So that has some significance for the chart to become bullish, right? It really needs to get above this 307.3 level, right? This one over here, it's just from structurally speaking, that's where this sort of, initial breakdown happened. And then since then, it's just been sort of drifting down to sideways. And, so from structurally point of view, 307.3 on a daily basis, that's where I'll start looking aggressively bullish, because I would think that, the bottom is in place of some sort and it wants to go higher, right? Unless that happens, it's better to kind of be cautious on the long side. Here's the hourly view as well. You can see, right? Still stair stepping down. Still the hourly swing high are not getting broken back to the upside, right? So right now, so far, 303, 304.7 area is the sort of the hourly swing highs. As long as we're below that, it remains under pressure. If it gets above that, then 307.3 is the natural first target on the upside. Okay, so monthly view of SPX, right? From monthly perspective, it's very similar to the QQQ, right? Monthly bullish bar. We got a top wick. In the previous month of August that just ended, and now we just opened up with September. It just had maybe a couple of days of September, right? And we have a top wick so far, and the pressure is still to the downside. So now if we get a bottom wick, it goes down and then it goes back up and turns red to green. That is a good swing long opportunity. But for right now, we're just going to give it some room and to see if this sort of channel gets broken to the downside. If I show you a weekly view. We are sort of there, right? We have this good dump to the downside, right? Back to back, 2 to 3 weeks, like all the way from 43.25 to 39.11, right? That's where you would expect some bounce to occur. So if this channel gets broken to the downside, right, that means this 39.11 support gets broken, and that's where the resistance was on the way up. We back tested that as well once we broke out of that level back in towards the late part of July, and now we're testing it back again. We just kind of bounced a little bit, but nothing too exciting here. In the daily view as well, similar chart. Unless we get back above 40.25, and then on a medium-term time frame on a daily basis above 40.58, I would say will give bulls some control back, right? Other than before that happens, we have to assume bears are in control and they will sell the strength. Okay. So from the monthly perspective, Amazon chart as well, we have a couple of days of September, so nothing too exciting from monthly point of view, except that the previous month we have a top wick, and after a big bullish monthly bar, that means we did not see any follow through on a monthly level to the upside. So if we drill down to a weekly view for Amazon, right, it is still okay if it holds this 122, 123 level, right, on the way up. That level provided resistance a few times, right? This was one, this was almost second and third, but if you combine that, one and then another one, right, and then finally it broke out right here. So we're back there in that same area, this 123, 122, or if you want to just even say 120, just as a sort of a round figure, right? So we'll see if we can bounce from there and then get a weekly close with a wick, right? That can be a good early sign of this thing bottoming here and wants to go back up. But for that to happen, we'll have to wait for a weekly bar, next weekly bar to close to see if it wants to take that shape. For now, we just still have a little bit of gap fill left towards the downside. That after the earnings, we saw this gap up, and we have this first sort of support from last week at 123.6. If that gets broken, then you can play towards the gap fill, which is something like 122 maybe. If it breaks that even further, 118 and then 114.6 is the sort of the structure low. To get bullish, it really needs to get back above 132.1, as we have multiple touch points there, right? One was like that, where we had a bounce. Once we broke down, we back tested it 2 times, couldn't get back above it. So that means this has some significance, right? Once it gets above that, only then we can start trying to be a little bit more aggressive on the bullish side towards the next level on the upside. Okay, unless or until that happens, it's good to be cautious. All right, Apple, back to back 2 weeks of bearishness, right? Bearish trend bars. That means, when I say trend bar, it means that it opened up that week towards the higher side and then it closed towards the low side of the week, right? We don't have a long bottom wick to consider in our analysis, right? So that means it's a trend bar. It's this whatever direction it is in, it's maintaining that momentum. So right now the momentum is still down, okay, because after this top wick we have had 2 down weeks now, and the structure low is not until, let's just say, weekly, this 150 number, right? It's just a psychological number. That's where we have multiple touch points as well on a weekly time frame. From daily perspective, bearish bar, right? Back to back, no bullishness after the bullish Thursday hammer bar, right? Opportunity. This opportunity, market participants saw this as an opportunity to sell the strength, and that means we are not feeling bullish until about 161, and then finally after about 163.1 we can start feeling a little bit better. Tesla, again, from monthly perspective, still no hard damage done, seriously, right? I mean, we have this big bullish monthly bar sort of after this whole cluster was broken to the downside. We had 3 months of support around 207. We broke out above 256, right? And then the previous month we sort of consolidated towards the higher end of this bullish month, and now we are just towards slightly above the midpoint of this bullish bar. So I'm still okay and not aggressively I would say bearish unless or until we get back under 256, right? That's where sort of the midpoint is. If you look at the weekly chart, right, that's where all the resistance was on the way up. Price couldn't get above 256 level. Anytime it would come here, it would get rejected, and that's why you have all this clutter. And once we got above that, we back tested that level, right? So that means again that has some significance, right? So we got this nice to the upside. Since then we got two top wicks, this one, another one, and a little one, but still the direction is down. Lower highs, lower lows. Structure low is not until 256, so definitely can play towards that. First touch bounce, and then we'll see what happens if it wants to go down or if it wants to move back up, right? We have our daily view here, still bearish. I mean, this is not how a bullish bar looks, right? Where your daily bullish bars are not seeing any upside follow through. In fact, you know, people just end up selling the strength, right? So if I bring the levels here, we have our nice levels. If I look at a 15-minute view, you know, we'll evaluate it. What happens once it gets above 273, 277? That's sort of the intraday resistance levels that we have from previous week, previous day, Friday. So unless those get broken to the upside and this thing holds, you know, you can't be bullish on this name. NVDA. Okay, so we are pretty much broken down on this name as well, right? Still the downtrend line here provided resistance. 3 back-to-back bearish weeks. First, you know, this is sort of the first close in a weekly view below this level, right? This structure low level. So that means whatever we were anticipating, that if it was to turn back up from this 160 level, right? We talked about it in our previous 2 weekly videos. We could think this as a neckline, right? And then we could have played if it had broken out above 193.2 as a sort of the inverse and head and shoulder. But that did not clearly happen. It broke down below 162. So that scenario did not play out, and we just kind of, you know, not going to consider any bullish play because it 160 level did not hold. So we got this gap down Thursday morning, right below 145. So we have an inside day on Friday. So now let's see if it can crawl back up above the high of the inside day to feel a little bit bullish. But again, not really leaning bullish until we get comfortably above 145 to play towards the gap fill. But if it breaks down 132.7, then we really don't have much support until, like, you know, the lower levels. If I bring in, let's say, a weekly view. So yeah, I mean, there's just whole clutter here, over here, right, back in the pre-COVID sort of, or not pre-COVID, but let's say, you know, middle of the COVID time period, where we had this clutter zone below 132 and then maybe like 115, 120 level. So not too exciting for NVIDIA, it looks like. That's not what the bullish chart looks like, right? Even for the AMD, the support zone here in the monthly level is this 72 level, right? We have so many touch points here. The monthly bar has bounced back up from, right? But now let's see if it holds or if it just gives up and there is no support, no real support, I should say, until 52. So we'll see what happens. On a weekly view, still again looks weak, unless we maybe get an inside week this week. If it stays above the low of this previous week, and then after the inside week it maybe can crawl back up towards 91, and then because the structure overall speaking remains bearish as long as it's below 91, right? So I will just be looking to sell the strength. Any bullish day, nice, you know, we'll see what happens. But for now, we have to assume the pressure is on the downside. There is more urgency for the price to get to the lower levels. Okay, Microsoft, weekly view, right? Still, yeah, it's kind of broken actually. This one has given up. It's this level, this weekly resistance level that it broke out from. So it has closed below that comfortably, at the 268 level. So this is the structure low now, around 249, 250, and that can be the first downside target on further weakness. And then if it gets broken, then we have 238.5, sort of the number to target on the downside. So as long as it's below 265, 267, no need to really call it a bottom or try to catch the falling knife or something. It's just weak, really weak right now. Even in the lower time frame, all these 4 hourly bars, right? It's just dominated by this bearish trend bars, right? So nothing too exciting. Google still in a weekly time frame, this bearish flag is still very much intact, and like I always say, you should look to sell from risk and reward perspective on the top end of this bearish flag, right? We are getting, that thing is playing out, right? Lower lows, lower highs, and now we're getting close to breaking down, and or should I say breaking out of this bearish flag, right? If that happens, maybe we get a pause bar, right? Because they never always break it down when you're expecting it. They always give you a pause thinking that it's going to go up, and then on the following week they just break it down. But again, we'll play day by day how it happens, but this is something that I've seen play out, that you can be on a lookout for on a daily basis. Here is the view. We were bearish on this name below 113 comfortably, right? And it did that, and since then I think it's just the way it's sort of moving right now. This is sort of the resistance zone, and we're moving sort of making lower lows, so this can usually break down pretty bad if it wants to, probably below 107, 106 level. It can just free fall. So we'll see what happens, but that is something that you can keep in mind. All right, let's take a look at one more. Shop, weekly view. Shop still weak, not a really exciting name to play, and it's just sort of range bound. So to play it on the upside, I really want to see a weekly bar close above 34, because that's where sort of it recently gave up this support. Has not really broken down, but to be on the bullish side and feel comfortable, you really need to have a daily bar at least close above 34. That's where it is breaking down from. You still see red bars are dominating, bullish bars are not seeing any follow through. So unless that picture changes, pressure remains to the downside. All right, folks, thank you very much for watching this week's video. If you have any questions, feedback, comments, please leave us a message and we'll get back to you. All right, thank you.